We can look at question 3b. Commodities are often viewed as an asset class that helps investors diversify a portfolio of traditional assets, shares and bonds due to low return correlation between commodities and traditional assets. Required in relation to the above statement, argue for cases why commodity returns might have low correlation relative to traditional assets. Now we know that the traditional investments include, so we can have TIs right over there versus alternative investments right over there. The traditional investments include stocks, bonds, cash, like that. Alternative investments have got hedge funds, private equity, real assets, commodities, and what we call structured products. Structured products like that. Now we are being asked, in relation to the above statement, argue for cases why commodity returns have low correlation with stocks and bonds right there. So we can start over here and say, so we are looking at B. We can say commodities do not have cash flows. Number one, commodities do not have cash flows for discounting. And are driven by supply and demand factors. And are driven by supply and demand factors. Like that. We move on to the second point there, and we can say commodity prices versus stocks, like this, commodities prices versus stocks and bonds versus stocks and bonds should exhibit negative correlation. Should exhibit negative correlation and we are saying because the factors of production include raw materials, we are saying labor, amongst other factors that also contribute towards commodity prices like that. So they should exhibit negative correlation because of the factors of production, because of the factors of production have a direct input or impact on the commodity prices there. Number 3, we can say that commodity prices are affected by short-term supply and demand factors, by short-term supply and demand factors, rather supply and demand expectations, if you wish, yes, supply and demand expectations, and hence therefore should exhibit negative correlation, and hence should exhibit negative correlation. There. Number 4, there we can say that inflation and changes in inflation and changes in inflation are negatively correlated with prices, are negatively correlated with prices of stocks and bonds, like that, but they are positively related with commodity prices, related with commodity prices. There. Those are the 4 points which I can be able to try and provide for now. However, there are other points that we can be able to probably include as the reasons as to why there is that correlation, there is negative correlation between generally between alternative investments and traditional investments, like that.